All right, let's do this. Yo, hey everyone. Thank you for allowing me the opportunity to speak to you all today. I remember it really wasn't too long ago that nobody cared about anything I had to say. And so not only am I appreciative for the opportunity to speak to you all, but also your willingness to listen and your interest in the future of cross-border payments, Strike, and Bitcoin. And so without further ado, let's get started. The title of today's talk is Strike, Disrupting Cross-Border Payments, with a question mark. Of course, you all gave it that title, not me. You didn't consult me at all. And so the first thing I'm going to do is update the title of the talk. I'm going to firstly remove the question mark, as I don't think it's needed. And then the second thing I'm going to do, I'm going to replace Strike with Bitcoin, as I see Bitcoin is the true innovation and disruptor here, whereas Strike is simply an expression of my ideas, wherein which I see Bitcoin both as a global asset and a monetary network, useful and helpful. And so quickly, just a little about me. Hi, my name is Jack. It's nice to meet everyone. I'm the founder of Strike. I was born and raised here in Chicago, Illinois. I really like steak. I don't have an alma mater, unfortunately. I am a college dropout, but that is okay. And I've spent my entire adult life here in Bitcoin. I'm coming up close to a decade of working in the space in a variety of ways. My family come from quite the finance background. My grandfather was the youngest ever chairman of the Chicago Board of Trade. My dad founded one of the bigger discount futures brokerages here in Chicago. And so by the time I was a senior in high school, I was coming home to my dad and his buddies in our living room, talking about Bitcoin, working on Bitcoin, thinking about Bitcoin, everything Bitcoin. And so by the time I was a teenager, that's all I knew. And so I've contributed. I created one of the first open source Lightning Network wallets called Zap. I helped design and implement some of the early mining difficulty derivatives that some institutions still use today. The first NFL player to ever get paid in Bitcoin, Russell Okung, that was facilitated by us here at Strike. We designed and helped race the Bitcoin car at the Indy 500. It was a very material part of what happened down in El Salvador, and recently we helped integrate Bitcoin payments into Twitter. So trust me when I say I am an expert of almost nothing, but if I do know a little bit about something, it is probably Bitcoin. I've been around the block once or twice. And so the mission of the company I founded, Strike, is to make the Bitcoin network easily accessible and usable. We believe here at Strike that with Bitcoin as the monetary network for the world, the financial system will be cheaper, faster, more innovative, and more inclusive. And so for today's talk, I want to go over the history of cross-border payments and revisit quickly where we have been as a species and highlight where we are today, which is Bitcoin's Lightning Network. And I promise I'll go quick. I know I'm preaching to the choir. If anyone knows the history of cross-border payments, it is the IMF, and it is not me. So I'm by no means the expert in the room, but I do think it's important to cover how we have gone from carrying physical cash to where we are today. And so I'm going to kick it all off with the Telex machine. So Telex was founded in Germany in the 1930s. I feel it's important to start with Telex because it was one of the first digital forms of messaging between financial institutions. So financial institutions and banks realized that, hey, we can't really facilitate international money transfer without talking to each other. And in the 1930s, Telex was the most convenient way to talk to each other. It was the primary tool to facilitate international money transfers in the developed world up until the 1970s. The downsides are pretty obvious. I used this really crappy image on purpose. It involved manual labor and reading and writing of the messages. It was very expensive. It was very slow. But hey, you do what you got to do in the 1930s. And it wasn't until the 1970s where we had our real next level of innovation, and that was SWIFT. SWIFT was created in 1973. It was built for banks by banks. SWIFT is home to over 10,000 institutions today, and it was really built and optimized to standardize the messages, the language, and the payments data across the globe. They figured, hey, we're sending all of this data and these messages between each other with telex, and we didn't standardize it at all. There's no uniform to it. There's no rules to follow. And so Australia writes it this way, the US writes it that way. It's kind of a mess. We need to standardize it. The institution should create some formalized standard, and we should all assign ourselves to implement that standard. Some of the problems with SWIFT, though, is it's not an open standard. There's gatekeep access to join the SWIFT network. The intermediaries within the SWIFT network make it extremely slow and expensive, and despite its optimizations, it still has an extremely high failure rate for international payments. The next innovation in the space is correspondent banking. Because of course, SWIFT was just a messaging protocol. It took some of the messages that we were using with telex and it standardized the messages, but the last time I checked, messages don't actually move money. Currencies ultimately are closed loop systems. Right? And banks had no way to move money from a domestic payment system in one country to another. And so they needed some formal standard in relationships between each other to facilitate currency movement in other countries, and that was correspondent banking. So it was kind of the latter half of the required holistic experience to actually move a dollar over to Europe, for example, right? At the end of the day, it's just pieces of paper. And so that is what we have today. Today, over 80% of cross-border payment revenue is still captured by banks, and the predominant use of international money transfer and the method in which we carry them out is SWIFT plus correspondent banking. SWIFT is this messaging standard, and correspondent banking is how we actually facilitate the transaction and achieve finality. Okay, over 96% of the projected $155.9 trillion of cross-border payment that's to be expected in 2022 will be B2B, will be from institution to institution, and this, to this day, although founded in 1973, is still the predominant way that we get it done. That's why I use this image. I think it's hilarious. This thing's going on 50 years old. This is a lot older than me, and it's sweating a little bit. It's got some issues, as we'll go over, and it's still carrying all the weight. And so I just spewed a really, really interesting metric pretty casually. So let's highlight that for a second. $155.9 trillion of expected cross-border payment volume in this upcoming year of 2022. That's astounding. One of the more eye-popping visuals on this graphic to me is the 5% compound annual growth rate. To me, that's very telling. That means that there is still an insane amount of demand that hasn't yet been captured in cross-border payments, and that facilitating money transfers globally is increasingly more popular. We live in now an internet age where we're all connected digitally, but not financially. And so I think that that is very, very interesting. The other really interesting part is that 155.9 trillion is expected, but only 150.7 is B2B, which is the SWIFT plus correspondent banking solution. What about the other 5+ trillion that's to be expected in 2022? How do they facilitate cross-border payments? SWIFT, of course, was built for banks by banks. Last time I checked, I'm not a bank. How do I make a cross-border payment? That's where money transfer operators come in. Money transfer operators exist to service what SWIFT and correspondent banking cannot. And so to highlight some of the more popular use cases, that's emerging markets, lesser developed markets, smaller payments, and an increasing amount of consumer demand. Okay, and so what exactly is a money transfer operator? Well, I'm in the right place, right? Defined by yours truly, the IMF. Money transfer operators, also known as MTOs, are financial companies, usually not banks, engaging cross-border transfer of funds using either their internal system or access to another cross-border banking network. Okay, and so if we visualize that, they're not very different than a bank. They just technically aren't a bank, whatever that means. And so they still work with correspondent banks. They still connect you to your cash collateral, your checking account, your debit card, and they just help facilitate the cross-border payment where maybe the traditional correspondent banking network cannot, like an emerging market. So one of the more famed MTOs is Western Union, at least for me. I grew up knowing what Western Union was, and of course they have these brick and mortar locations all over the lesser developed world to help facilitate and achieve finality of cross-border payments. The new kid on the block, the disruptor, you may love him, you may hate him, but you're probably not in between, is TransferWise, right? And so now we're starting to get familiar with what is an MTO, okay? And there's a lot of them, and when you take a look at this industry, I find this graphic really helpful. This is the index monthly volume exchanged by U.S. customers throughout some of the more popular MTOs here in the United States. And so what this graphic shows us is Zoom, owned by PayPal, and TransferWise. They do a tremendous amount of monthly volume, right? A lot more than Western Union. In fact, they're also trending upwards and to the right in the right direction, whereas Western Union is stagnant or, if anything, down. So what does that tell us? I mean, I think this is obvious. There's no disagreeers here, is that times are changing and that consumers are developing new expectations for their financial services, right? Is that they're expecting to be cheap and free and intuitive and increasingly digital. Mobile phone ownership all over the world is growing, and in emerging markets has risen by over 80%. It's been a huge driver as to why there's been more growth in population in banking services with those in lesser developed markets and having mobile wallets and mobile payment methods. And so I think that's true, and that data is very telling. However, it's not the real story, and not the whole story, and not the true story. What does this graphic tell us? This graphic is the average transaction value of the payment size. So what this tells me is that TransferWise and Western Union don't share the same target customer, right? So if an average transaction value for TransferWise is over $1,000, they can't possibly be serving the same target customer as a Western Union that's well under $500, right? TransferWise is not serving low-wage working. TransferWise can't possibly be optimized for the lesser developed markets of the world, right? It's almost as if TransferWise created a new cross-border market and has won that. And I think this graphic further solidifies that thesis, is that although TransferWise may be one of the leaders in monthly volume, they are the opposite in monthly U.S. customers. Western Union still has the most monthly U.S. customers. They just happen to be transacting much smaller size. So that tells us that payments volume isn't everything, and there's still a tremendous amount of demand for smaller value cross-border payments, micro remitting payments, and those that are low-wage workers, those that are sending money to emerging markets and lesser developed markets. So TransferWise's disruption and innovation didn't actually solve a lot of the most crucial problems. It just enhanced the experience for others that were using maybe SWIFT and correspondent banking, right? And this is actually true. I'm not the only one that believes this. You know who else agrees with me? The G20 and the UN. The G20 and the UN are top-down mandating lower pricing for cross-border payments. They want an average cost of 5% to the consumer. Why? Financial inclusion. They've known the popularity with low-wage working and the role that remittances play in the economic development and economic stability in emerging markets. And they know that 10% cross-border remitting payments isn't going to cut it. And the more that we can collectively lower the cost to send money around the world, the more inclusive that experience gets. The more stable economic development can be in emerging markets, the more human freedom we can instill. It's not just me. The G20 and the UN, we're on the same team. We're on the same team. So if we look at this price suppression initiative from the G20 and the UN, who are we trying to get to suppress prices? Well, MTOs are at 6%. That's very high. Banks are almost double at 10%. Unacceptable, right? Unacceptable. And so if we visually take a look, costs have been falling. That's helpful. It's helpful. So it's working in theory, right? I think this is also just the best, though. So not only is it working, but according to McKinsey, growth is increasingly driven by lower value payments, right? The average ticket size of correspondent banks in the EU is declining. And the compound annual growth rate for emerging markets is now over 10%. So the 5% for the holistic industry, emerging markets are growing twice as fast. And a lot of that has to do with the fact that we're collectively trying to lower prices and make this experience more inclusive, more accessible, right? And so that's my history in the recap of kind of where we've been, what exists today, some of the problems we're facing, and what we're trying to address. Me, the UN, and the G20. Just the three of us. So these are the major challenges I think that no one would disagree with. Speed, limited transparency and dependability, high cost, a lack of interoperability between all of these systems, limited coverage around the globe, and limited accessibility to the solutions provided. Okay? Let's dig into this. Speed. So cross-border payments can take up to 3 days, unless you're in a lesser developed market that maybe doesn't have correspondent banking networks, maybe doesn't get served by TransferWise, right? So 3 days if you're lucky. Unacceptable. Unacceptable. The transparency and dependability. Lack of transparency and dependability results in higher costs for these institutions, slower delivery times, and a worse experience for the user, worse experience for the customer. In correspondent banking, there's limited transparency and dependability. Correspondent Bank 2 didn't tell Correspondent Bank 3 something, so 3 doesn't know what to tell 4, and 5 doesn't know what to tell the end consumer and why it failed because 3 is unacceptable. 1973, it's almost 50 years old. High cost. In a cross-border payment, there are typically 3 legs to the cost a consumer pays. There's the SWIFT messaging network fee, there's the spread on the foreign exchange rate, and then there's the actual transaction fee that the institution charges. And all of that, really, the banks can get egregious in their FX rate. So if you're lucky, you're paying $25 to $35. But actually, banks get really aggressive on their Forex rate and that they charge the end user. The lack of interoperability. So we're living in a digital age where financial experiences aren't strictly banks. You have neobanks like Cash App and Venmo. You have mobile payment networks in emerging markets. And all of these closed-loop currency systems are not interoperable with each other. They live in these bifurcated independent networks. There's a huge lack of interoperability. The limited coverage. So yes, SWIFT technically connects to over 200 markets. However, did you know the number of active correspondent banking relationships globally declined by 20% between 2011 and 2018? The number of active corridors dropped by 10%, and this is according to BIS. This is not according to me, okay? The amount of fixed costs, the rent you got to pay all over the world, it's expensive to keep up the correspondent banking network. And it's declining. It's going in the wrong way. And that's not the same as accessibility. That's in the coverage around the world. Where can we facilitate and allow for solutions to exist? But what about access to solutions? Correspondent banking requires a relationship with a bank, hence the name correspondent banking. Right? How many people in emerging markets in lesser developed countries have a relationship with a bank? When I was in El Salvador, I learned that 70% of the country does not have a bank account. So for El Salvador, for example, 70% is the baseline that cannot use SWIFT plus correspondent banking. And of the 30% that in theory does have a relationship with a bank, what is the coverage? And can they actually use it? No. It's not accessible. These solutions aren't accessible. Okay? So in theory, if we were to, from scratch, design the perfect solution, we would want a global money. We would want a money that doesn't live in a closed loop system. We would want a currency that isn't regionalized and localized to a nation state or to a country, right? We would want a global money that was equally valued everywhere in the world by anyone in the world at any time in the world, right? Of course, it would have to be uncensorable and unfreezable, permissionless, borderless, liquid, and digital, right? We have to rely on this thing. What if it was in an authoritarian regime? What if it was in a suppressive government state, right? Like, we, of course, needed to have these qualities so that we can rely and depend on it. And then we would need a global standard, right? The global money needs a unified standard, or dare I say, a common language and model for payments data across the globe, which is what SWIFT calls their standard. We would need one of those for this global money, of course. And then it needs to be accessible and open to everybody. It'd be really, really nice if all you needed was a cell phone and access to the internet. That'd be helpful. So in theory, I think we can all agree that if that existed, it'd be a tool worth looking into, I'd say. Okay, well, what are our options? What about tulips? I don't know. At the end of the day, it's a flower. Can't be sent over a communications channel like the internet, unfortunately. Okay, what about gold, right? Isn't Bitcoin like gold, supposedly? Well, I don't know, gold's been around much longer than the telex machine, so surely if gold was the solution, we wouldn't have invented SWIFT, right? So that's safe to say. These heavy bars aren't of much use here. What about Bitcoin? What about Bitcoin? And hear me out, okay? I'm not pitching you to mortgage your house and go all in on Bitcoin. I'm just saying, as a global monetary standard and a global monetary network to improve cross-border payments according to the issues that we just established. I think it does. I think it does. Okay? Because Bitcoin, if we think of it as just a tool that could be helpful, it is a global money that is valued equally everywhere at any time by everyone in the world. Okay? It is not in a closed loop system. It is not a localized currency. In fact, it is in an open system. It is a monetary policy that is defended by a distributed network of peers. Okay? So there's no central point of failure. There's no government that could overthrow it and change it. It works 24/7. It is trusted, reliable, and sufficiently decentralized to survive. Okay? And then because it is digital, naturally, we can build standards on top of it that optimize for speed and for cost, which is the Lightning Network. Okay, so we have this global money that lives within a distributed network that's sufficiently decentralized, that's valued everywhere, that knows no borders. And then we can make it fast and cheap. We can solve for the speed and the cost. Okay? So what if instead of SWIFT plus correspondent banking, we had Bitcoin in the Lightning Network? And instead of all these financial intermediaries, we just had nodes on the network. Okay? And so again, I'm not pitching you to leverage long Bitcoin, okay? Whether you think Bitcoin's going to zero or you think Bitcoin is going to the moon, I want you to think of Bitcoin as a monetary network like SWIFT plus correspondent banking is. Okay? Because if you take a closer look, Bitcoin offers superior payments. Bitcoin is the most impressive monetary network in human history. Look at the properties. Bitcoin is open. It's globally accessible. Okay? You can send and receive. It is cash final. There's no sense of credit in this monetary network. There's no float. There's no T plus X settlement. It is a bare instrument that is physical. It is a digital physical instrument that settles cash final, irreversible. And then with the Lightning Network standard, this money is relatively instant and virtually free. Superior global payments. And so I'm going to tell a story. This is a true story, by the way. It was about a month ago. I was invited to the home of an executive at one of the largest asset managers in the world. They manage trillions of dollars worth of assets. And word on the street is there was some 27-year-old running around the Bay Area claiming that he was going to disrupt cross-border payments with Bitcoin, and I was tasked to explain it to him. And so I get to his home, and I was having a tough time really, talking about the Lightning Network and peer-to-peer and decentralization. And he had tortilla chips and trail mix on the table. I looked him in the eye, I said, you got to bear with me for a second. This may be weird, but I'm just going to visualize this for you. And I poured the tortilla chips and the trail mix out. This is a true story. True story. And I put a tortilla chip on the left, and I said, here's a user in El Salvador, okay? And this is a user that wants to send a cross-border payment. And I put a tortilla chip on the far right of his dining room table. I said, here's a tortilla chip in El Salvador that wants to receive a payment, okay? And I put a bunch of tortilla chips all in the middle, okay? And then I put a raisin on the U.S. tortilla chip. I said, that's representative of $1. And so the U.S. tortilla chip wants to send this raisin to the El Salvador tortilla chip. But you got all these tortilla chips in the middle. These are the required intermediaries to facilitate this money moving all the way from one closed-loop regional system in the United States to El Salvador, okay? And all these intermediaries in the middle, they have all these raisins on them, all these sunken costs. They got to pay all the rent for all the brick and mortar locations all over the world. They got to pay the SWIFT fees, the banking fees. They have to custody their own raisins so that in the event that you wanted to get a raisin in El Salvador, they had to front the credit to the next correspondent bank, and there's settlement delays, and there's cost of managing all their raisins, right? And it's a real big mess to get, I'm just a U.S. tortilla chip. I mean no harm. I just wanted to get my raisin to the other side of the world, right? And so that's what it is today, okay? That's SWIFT plus correspondent banking plus Western Union and TransferWise and all these, right? And so then what I did is I took, same thing, I said, okay, we'll leave that up there. I took a new U.S. tortilla chip down below and an El Salvadorian tortilla chip to the right. And I said, you know what's miraculous is that if I take a peanut from the trail mix, I can swing this peanut between the U.S. and El Salvador instantly and at no cost. The peanut is irreversible. It is cash final. It lives free of intermediaries. It is open. It is global. And the peanut is valued everywhere in the world. Okay. The problem, though, is that everyone said that they're allergic to peanuts. That was my joke to the asset manager. Is that no one cared that I could swing peanuts between these tortilla chips because everyone was allergic to peanuts. And so then what I did for the gentleman is I put a raisin on each, the U.S. tortilla chip and the El Salvador one. And I said, listen, don't think of the peanut as something you have to touch. If you're allergic to it, you're allergic to it. We can still allow the tortilla chips to interface with the raisins, and we just use the peanut to get rid of all the muck in the middle up above. The peanut does the job of SWIFT plus correspondent banking plus Western Union plus TransferWise. You don't got to touch the peanut. You don't got to deal with Bitcoin's volatility or the tax consequences or the accounting headache or how technical it is, and you don't got to be a cryptographer. We can use the peanut to escrow raisins between all the tortilla chips without having to deal with all the muck. Right? So I crossed Bitcoin up top up there. Peanuts offer superior payments. The peanut standard, it's open, it's a network, it's global, works everywhere, it's inclusive to everyone. All you need is a phone and internet. You can send and receive, it's cash final, it's instant, it's virtually free, right? And it's not about being long peanuts. If you're allergic to peanuts, you're allergic to peanuts. It's okay. You can touch raisins. we can just use the peanuts to get rid of all the muck, all the legacy tortilla chips with all the raisins piled on top of them. Okay, and that is the thesis of Strike. What Strike does, and the reason I created it, is it connects your cash collateral to Bitcoin. Okay, you can make Bitcoin payments with your dollars. You can move raisins between tortilla chips over the peanut network. Right? What if I could initiate $100 to go to Europe, and the dollars get debited, turned into Bitcoin, zipped across the world, and then converted back into euros? What a world that would be, right? You're not exposed to the volatility of Bitcoin. You don't need to know how it works. You don't need to be bullish or bearish. We're using a superior monetary network, a naturally global, natively digital, open monetary network. And so here's a demo of me doing exactly that. This is me sending an international money transfer over Twitter from the US to El Salvador. Oop. Sorry. Yo, we're here in Chicago. And we've got David here in a Starbucks in El Salvador. David has his Strike account linked to his Twitter account, and we're gonna make a free, instant cash final remittance payment over Twitter. So I'm gonna go search David's Twitter account on my phone. I'm gonna find his tips button, and I'm gonna send David $10 over Twitter for changing the world. It's gonna open my non-custodial Lightning Moon wallet. Anyone in the world can download, and I'm just gonna hit send. And boom. We just made an instant free remittance payment from Chicago, Illinois, USA to San Salvador, El Salvador over Twitter. So that's pretty remarkable. That is something that Swift, correspondent banking, Western Union, TransferWise cannot do. And it's $10, by the way, which is the small size of international money transfer that the G20 and the UN wants. Didn't cost anything. So here's the view from my phone very quickly. This is over Twitter, by the way, right? So the thesis of the peanut network is every tortilla chip that hops on and speaks peanuts, we can all connect and transact with each other. It's the ultimate interoperable monetary network for the world that we've always desired. And so all I did was search on Twitter, checked out with whatever financial service I wanted. In this case, is a wallet called Moon, and it was that easy. Now this is, if I'm blowing your mind now, wait for this. Now this is David, the real David. David received his remitting payment over Twitter and immediately in San Salvador, El Salvador, checked out over the peanut standard at Starbucks. So let me just spell this out in plain English. $10 US were sitting here in Chicago, and they became a good or service at a local business in a different country in less than 60 seconds. That is remarkable. Okay, I'm not talking about making cross-border payments cheaper or faster. I'm talking about changing everything. Okay? If we take a closer look at that, this is what happened. We had a US tortilla chip initiate a raisin to El Salvador, and that raisin turned into a peanut with a crown and a smile, got to El Salvador and flipped itself back into raisins. And then the El Salvador tortilla chip was able to buy a good or service with it. And if we look at David, this tortilla chip was previously unbanked. This tortilla chip was previously abused by fees of intermediaries and financial services and institutions. This tortilla chip previously had to wait long delays to actually collect their money and participate in the financial services that they were privy to. And they lived in an analog world. They were cash-based, not safe. Okay? We fixed all of that. And so this could have been Strike to Chivo wallet to IBEX at Starbucks. This could have been Strike to Twitter to IBEX. This could have been Cash App to Strike to IBEX. Right? What am I pointing out here? This could have been Cash App to Revolut to Strike. What I'm saying is it's an open standard. The network effects and economies of scale, you can't compete. The G20 and the UN don't have to go mandate and tell a select few companies that have been around for decades to do better. We can enable an open standard and free market competition, which is what we want. Right? In the world of Bitcoin payments, there's no fixed costs. Everyone in the world can use it. It's digital and it's free of any intermediaries. Okay? So if we revisit our major challenges, they're all addressed. Bitcoin on this monetary network, payments are cash final relatively instantly. It's an open system. It's transparent and dependable. It's as close to free as any monetary network has ever been. It's interoperable to anyone who implements the standard. You don't need to submit an application. You don't need to do anything. You just have to implement the open standard that lives on the internet. Its coverage grows with the network effects and economies of scale that come with an open network, and it's accessible to anyone with phone and an internet connection. And so what I did with the gentleman is I took these guys in the middle, the asset manager, I was, at his home, so I wasn't being rude, but I was like, get these guys off the table. We don't need them anymore. Peanuts can do their job, right? The future of cross-border payments is this. You just want to pinch this peanut's cheek, so cute, but you can't because you're allergic. You don't want to touch him. But on a more serious note, only half serious, is that free market tortilla chip competition is what this enables. And that if we don't need to rely on the legacy tortilla chips in the middle with all the fixed costs and the legacy delays and the slow speed and the high fees, then with the peanut standard, the tortilla chip can elect the winners of the free market based on their preferred experience. The free market competition ends up optimizing for the quality of the experience of the tortilla chip, which is what we want, which is what the G20 wants, which is what the UN wants ultimately. And so really my pitch here today is to relay the message that Bitcoin is simply a tool, right? Just like the hammer and the nail is a tool. You could build a home or you can act maliciously against someone, right? Bitcoin is not here to spell the death of anything. Bitcoin is just a tool. And as human beings, we're all the same species and we're all set out to make this world a better place. And if we truly want to improve the experience of cross-border payments, suppress pricing, enhance the experience, expand connectivity, interoperability, transparency, dependability, and make it inclusive for everyone, I urge you to take a closer look at this tool. It is a remarkable tool, dare I say, the best financial tool humanity has ever come across monetarily. And I think it can do a lot of good work for the future of cross-border payments. And so the mission of Strike, and if you look at the bottom, I crossed Bitcoin out. We believe with peanuts as the monetary network for the world, that the financial system will be cheaper, faster, more innovative, and more inclusive. So, thank you. I really appreciate, again, I sincerely appreciate you all taking the time to hear me out. I think Bitcoin is the best monetary tool humanity's ever conceived. And collectively, between Strike and the Bitcoin community and the G20 and the UN and the IMF, I think we can make a lot of great progress for our species is if we take a closer look at this tool and try and optimize its usage to be helpful. And I think cross-border payments is one of the lower hanging fruits. So I really appreciate this opportunity. Thank you so much. You can contact me. My email is jack@strike.me. And all the thoughts that live within this noggin of mine, the ones that I'd like to make public, almost always live at Jack Mallers on Twitter. So again, thank you all. I appreciate it. And that's all I got.